European Central Bank President Mario Draghi announces he will skip the annual Jackson Hole meeting of central bankers as media speculates on why. Gold and silver pull back overnight after recent impressive moves. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So markets are quiet ahead of Jackson Hole and ECB, but indices are holding higher. Seems as though there is still some select movement out there despite markets being relatively quiet. So how are you positioning right now, Scott?
I think at this point, a lot of traders like myself have flattened out. We tried to hold, 5, 7, 10, 12 positions depending on who you are during the month of August, because August was very conducive for that, especially since that August 3rd jobs report where we ignited higher and just slowly followed that trend. And in that trend, we had stocks that were moving unbelievable with relatively no pain. So even as an intermediate trend trader, it was kind of like the first quarter where you could be in multiple stocks with the hedge, maneuver them, trade them, and have a great month. And for a lot of guys in my office who follow the show, they've had a really good August, maybe even the best of the year.
So if we take a look at the S&P chart, how do you think it's shaping up right now?
Well, short term, it's a little choppy. You take a look at the chart, you'll see last week on that Tuesday, we had the outside day, which was right here. This is when it pushed through 1422, went as high as 26. That produced some weakness. Some sellers came out. You saw a 3-day down move into Friday, about 26 handles. Then you had that reversal Friday at the 21-day at the support that was holding during the, earlier in August. And then yesterday you opened up and closed on the lows. So, some guys short term are saying you have a lower high, here's your high, here's a lower high. Does that mean the trend is now going to be to the downside? So I think, guys are going to trade verse this 1398. This is your upper level. We might need to spend some time going into Friday, into Jackson Hole, or into next week, which I think on the 6th in September is when the ECB meets and starts talking about that bond buying program. And then if we do wind up breaking below this level, you have the 50-day moving average down here around 1371. You have this trend line that's been supporting this market ever since the June 4th lows. So I think on a macro level, we could even pull down to here and be just fine, maybe just not as pent up as if we held higher, above 1398.
And then looking ahead even further, what does your gut tell you right now about how the fourth quarter might shape up?
Well, we have those two levels to trade against. My gut tells me the highs of the year aren't in. We're not going to fall apart. We're not going to all of a sudden get rid of all the constructive action that we've had. I think that there's been money put to work and it's going to support the market. The question is just the speed. Is it pent up and are you chasing, or is there more time to buy the dip? And at this particular point, I think a lot of traders are flat. There are still guys short. So the question is, do we hold 1398 and then go through 1422 to 1426 and close 1450 to 1470? I think ultimately we can see those upper levels. Or do we retrace a bit more, get a little bit more bearish involved, get below 1398, go to 1370, 1371, bring out all the growls, get some more people out of stock short, and then go to that level. But ultimately, I would do my 75% chance that the highs of the year are not in. Just the question is, where could you buy the dip? What tier can you be? What go-to stocks will remain the same because they've been changing a little bit. But all in all, the equity markets are very approachable from any time frame as long as you do it and you do it with an educated process.
Yes, and in the meantime, there are areas that are acting well. High beta tech remains a focus as Apple gave a lift to the market yesterday on winning its patent case with Samsung. How are you positioning with Apple right now?
Right now, I'm flat. I've been trading it for the most of August. I was long it. It acted very well ever since that gap down on earnings after a few days, filled the gap, gave you a very constructive move to the upside, and then it started to extend. We had a lot of price points to trade a tier system around. So if you go to the chart, I'll show you a few of those. First things first, this was the earnings that missed. Then this was the gap that it traded into. Here was a really potent move to the upside. This is when you could have switched gears and as an intermediate trader got back involved, which is what I did. Then you could have added above 620, which was nice, and then you had another nice move, and then it went above the previous high here of 644, all the way up to almost 674.88, and then it consolidated well again. So you could have repositioned, after you saw that on digestion-wise, it was fine, which is what I did. That's why on Friday, got back involved, sold yesterday. Now, if you take a closer look here, it all depends on your time frame. As a macro investor, stay the course. I don't think the highs of the year are in. As an intermediate trend trader, you could try and be a bit more cute. Look at 673.54. Use that as a pivot. If we go below, see what kind of downside probing we have. If it comes back above, then you buy and you use that low as a stop. And then after a bit more digestion, then for momentum, you could use yesterday's high, which is right here at about 680.87. Here's your 8-day. Here's the gap. Here's yesterday's pivot low. That's what I'm using as a gauge.
And then on the flip side of that case, Google declined on Apple's victory, raising questions about, will Apple go after Google? What's next for this stock? What do you think about Google right now?
I think Google's acted very well since earnings. I don't think, I could be wrong that Apple's going to go after Google. They had the big win in the hardware. Some people say they might start going after people on the software side. But if all of a sudden Apple starts going after everyone, they're not dumb. All of a sudden the monopoly word's going to come up, and same way that, kind of was the doom of Microsoft and a few other big companies out there. I don't think they do it. I think that they're positioned well enough, and they just didn't want someone taking free lunches, copying all their designs and excess. But anyway, the chart of Google, we talked yesterday about 660. This is upper level support. Yesterday was more of an opportunity on the open than not. I think I had a few good trades there from the long side with my community. It did close near the highs. If you want to take a closer look at it, you will see that short term on my price point sheet, I'll have 672 as a potential buy price to fill a bigger portion of the gap. But then overall, it's still above the 21-day. It's well above the 50. This is where it was earnings time. You look at the old highs, it's still, trying to hold around there. So I think, composure is really good here. And I think you could stay with it as a go-to stock. And I do think at some point in the next 6 to 12 months, this all-time high of 747 gets taken out, and we see another nice move here. I like Google. Just know your time frame there.
And BIDU still trading below all key moving averages. What's the next resistance level buyers should be aware of?
Well, this one, was acting well, and then it changes. All these Chinese stocks are somewhat dangerous. That's why you have to watch them close. So as it stair-stepped higher, it was a good intraday trade. And then once you had that potent downside move, we talked about 128 as a stop or 125 as a stop. Those were the prior pivots. So if you get out of it, that last Wednesday, there was a capitulation move down to 110. You look at the chart here. I do think it's definitely a hard investment, and I wouldn't be there if you don't have a tough stomach. But, after earnings, you had a nice gap up, and since then, you had a few methodical moves. Right here above 119 was a move. Then it flagged again. You had another nice move above 124. And then once it tried to break out and failed, which I always say is a red flag for me, you get ready to get out of the way. And then this potent bar that engulfed this entire range got most people stopped out. And since then, it's come in. I think as a trade, it can get back up to 120 to 122, but don't have much size, and make sure you do it intraday, because these Chinese stocks are just really hard for investors, and it has to be a perfect environment for them. And with the Chinese markets pressured, and in the headlines every day that of stimulus and new lows or whatnot, these stocks are still going to be choppy.
Now, what about Amazon? We are seeing choppy action out of Amazon lately. What do you think of it? Where would be a good spot to get involved?
This one has given you like 3 different pivots. First one after earnings when it traded through 228, 230, and then it gave you like 2 other ones where I traded from a micro level. But a lot of guys that are in there from an intermediate level or a macro level, they're doing just fine. It's just not Apple. You take a look here and you'll see that this was a nice potent move after earnings. It broke this downtrend. We talked about this price level many times. This right here was at like 230. You had a quick move, then it came back, some dip buyers bought it on the retest. For me, I got involved for this nice little 2-day move right there as it went through this flag type process above this area of 240. Now it's just methodically moving higher. As an investor, stay the course. It's riding the 8-day short term. If it broke the 8-day, could test the 21-day, could test this area. But overall, I think, Amazon is a chosen one, even though they have a high PE, and, a lot of people say the business model is flawed. The institutions still love it. So until we see something different, you could stay the course, but just always take your trades with Amazon.
And we are seeing nice moves out of commodities. Yesterday you actually said it would be a good time to get light, and we did see them pull back. Let's start with the GLD.
How about this? Let's take a commercial break so I can have some coffee beforehand.
I think we're skipping the commercial today. We're just going to go right for it.
All right, so no coffee for me. Let's go right to which one do you want to go with? GLD. Let's do it. GLD's been lagging silver, and at this point, it's down a little bit overnight. So with that said, you still have to price these things, and you need the right entries and exits. And if you look right here, this was a spot that we started talking about it again. It failed many times at this line. First time it actually gapped above it. Then the next day had follow through above it, which was 159.20. And then yesterday, you'll see it failed to make a new high. So I think that we're going to get some type of pull-in, but this move to the upside should give us enough power for it to continue. Question is, where could you buy it back? I would love to be able to buy this right around 159, 80-ish. I would like to see it test this moving average and, maybe fill this gap, but not fill this gap. If gold were to, to fill this gap here that ignited the move, I would say that this move is faulty. But if it holds around 159.80, 160, I think that's buyable for what could be at least a move to 160 or 166 or higher.
And what about silver? Could this be a good time to add?
Not yet. Silver just had its reversal outside day yesterday. I sold it, I think, after the fourth day, so I had nothing going on in silver yesterday. I just tweeted around 2:30. I'm like, silver feels a little heavy here. If it goes below 29.88, could produce more weakness. I'll show you what I was talking about on the chart. You look here, you'll see this was, your move right, last week, right around this time. I said, let's be a buy around 27.45. Gave you a nice move to the upside. Then yesterday, it broke above this 29.88, went through the 200-day squeeze, some shorts, had no momentum, so good time to sell some. This here too, I think it could probably fill this gap, which to me would be buyable. 29 area, if that holds, I do think we get another secondary move or third or tertiary move to the upside, because the potency of this should give you more action. The question is from where? So right around this 29, I think that's a spot I would look to buy the dip, especially if you sold some of this strength right there on silver.
All right, let's do some quick hits here. Great action out of Tiffany yesterday, rose more than 7%, reclaimed the 200-day. Could we see this stock regain some traction here?
This, I think, was surprising. I remember being in here and we're like, oh, Tiffany missed, blah, 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 blah. I started beating up on Tiffany and who really gets Tiffany diamonds and this and that. Usually you go to Tiffany's, you look at the stone and then you go to Uncle Jack and you get it for 40% off. But anyway, we're Uncle Stevie. I don't know which one you have. At this point though, big gap up, took back the 200-day, me. I like to use my gap rule. Give it some time. As long as it holds a big percentage of this gap, I think it's in the game for higher prices. So, watch it. I would give it some space though. The low here is 61.62. As long as it goes sideways and holds, I do think you can get higher prices. We've seen this before. You get your gap, you get digestion, and then you get your continuation. Continuation happens above 63.22. Boom.
And still seeing consolidation out of Goldman Sachs. What's your thoughts on this bank?
This too, with the other banks, just crawling a little bit higher. Every now and then you get a bit of momentum. Momentum and the banks typically aren't in the same sentence because they don't come together. But overall, they're acting okay the same way with some of the markets. It's not a leading sector, but at least it's not really a headwind right now. You look at Goldman Sachs, a few different levels to buy here. This was a decent one right here when it went above 102, and then you had a breakout failure here, and then you had a nice 2-day move there, and then it came back in and tested the 21-day. I would say as an investor, being tier 1 at most and only buy it for a trade when it's a perfect pattern. Right here it's really just not the perfect pattern. It's just a little bit choppy, but it could continue higher, which is would be helpful for the overall market. And
Schlumberger looking like it might want to break out soon. What's that breakout level that you're watching?
Yesterday it tried, and then when the market came in, it came off those highs. If you look here at this last upper level consolidation, the real level here on Schlumberger was right when it broke above this area. Remember the gap up? Oh, we talk about gaps. Here's a good example. Okay, this gapped up after a move off the lows. Had a bit of follow through, couldn't get through resistance, came back, tested the gap, and held. So pent up bullish momentum. So you could have bought right in here, added there, and then it's been methodically moving higher. It tried to break above this wedge yesterday, couldn't really get going. I think to get in motion, it's going to have to get above 75.43 to continue. At this point, though, it's been a nice move. So if we do pull back, it's prone for a pullback. Short-term watch support of 73.72. But overall, if you want to be in some of these refiners, because the OAH has been acting a bit better, I think Schlumberger could give you some alpha.
And we've talked a lot about LULU. It's regained some power. Can momentum continue here?
Well, we shall see. I think the easy bounce off the lows, the pattern that we've been tracking already ignited or resolved. So now the question is at this point, can you see a little bit more? So let's check it out. Here's that reversal. Hey, red dog reversal. There you go. There's the low, 53.19. Went as low as 52.20. Came back above. That's your buy. If you did that, nice 3-day move. For cash flow, look where we came from. Breakout failure. That always gives you a red flag to get out. If you got out there, here's the other way. Okay? And then you saw some commitment. Then here's your buy above this little downtrend. And now it's just methodically moving higher. You know, it's right now trying to get in this gap. The question is, can it fill it with some power? You know, we shall see. So at this point, my traders are trying to stay with it. If you're long, still following the 8-day, looks okay. But for it to get some power and stretch, you got to get above 64.89 with some volume. And then if that's the case, it fills the gap. And you know, I think it's a B play at best, not an A play. Okay.
And finally, Broadcom also acting better. What levels are you watching here?
Broadcom, Steph feeling favorite, I think, or one that she likes, and she buys it typically on the dip. So at this point, let's see where it's at and what's cooking. If you look here, you know, again, this was the reversal in Broadcom way back when, right there. Here was a little bit of commitment. It's been trending. You know, I guess last time I talked about it, I said, you know, stay with it as long as it sticks to this trend, and I think that's the case still. The low here, 34.93. So as long as it stays above this, I think it's okay for higher prices. But if it breaks it, be a bit careful. You know, I just want to show you Intel real quickly. No one's really talking about it. And if you look here on Intel, Intel's not acting well. You know, Intel, you have your high, a lower high, another lower high. It's hovering near, you know, big time support. You know, so at this particular point, it's below all moving averages. So the semis could be pressured, especially if Intel breaks this price. And I guess between Dell having horrible earnings and Hewlett-Packard and all of these, you know, old school PC/laptop names, you know, Intel must be having a bit of a tough time out there since they're not as, you know, actively involved in the handheld space like some of the other semiconductors. So I'd watch that level on Intel. You know, could be a decent short there too.
All right. So tell us, Scott, where is your focus heading into trading today?
The beach. No. At this point, I'm just going to try and make a little. You know, I've been telling my traders, we really had a really good August. We were pleasantly surprised. You know, the action was plentiful. You know, you had different sectors moving. Obviously, Apple, when that's in play, it's great for my traders because we watch it every day. Everyone's like, why do you focus so much on Apple? I'm like, why do you not? You know, it trades with great patterns. If you're right, you get follow through. You know, we've also had good movement in like the Google and the Amazon, you know, some select moves in the banks, then recently the metals. So what I'm telling people is not to get too giddy or excited. If you had a great month, book it. It's in the bank. Bears can't take it away from you. And we made some money short too, so you can make it both ways. This time, you know, the volume's really light. We still have some major events. You know, take some time, recharge your batteries. Don't do too much. I know a lot of guys yesterday got chopped up. You know, they overtraded Apple that was in a range that was where there was no traction, or they overtraded the spiders or whatever it is they were doing. They did too much of it. Don't do too much of it. Don't give back money for no reason. And I would say, you know, try and take a little bit of time going into Labor Day. I know a lot of guys are glued to their desks because I do think we're going to have a lot of activity in September, and I'd rather see you, you know, just full of energy and ready to go versus burnt out and breaking your computer each day.
All right, well, now it's time for you to grab that coffee and have a great day, everyone. Happy trading.